What's up, y'all, and welcome. Okay, so I have a serious question. If I were to ask y'all, what percentage of your money right now do you have currently invested in the stock market? Or what percentage of your money do you currently have right now saved up in cash? Would you be able to tell me what that percentage was? Well, if you can, congrats. You most likely know what I'll be talking about today in this video, but still stick with me all the way to the end because you could probably learn something new. If you can't, this is what is called portfolio management. And you're just in luck because in this video, I'll be breaking down exactly what that means, why it is important to us, and how you can get started on it no matter what level you're currently at on your personal finance journey. Now, before I get into all that, y'all gotta know I gotta shout out my returning subscribers. Almost 90 subscribers. Wow, thank you for the love and support. I really appreciate it. For those who are new to the channel, my name is Faithful Lobby. I post videos every week on topics related to money, mindset, and business. Feel free to subscribe down below to learn something new in these areas. Okay, let's get into it. So what does portfolio management mean? Now, according to nerdwallet.com, portfolio management is defined as coming up with and executing a cohesive investment strategy based off your goals, timeline, and also your risk tolerance. To simplify, I define it as knowing the current state and performance of your investments and coming up with an investment strategy based off where you see yourself in the future and how much risk are you willing to take to get to where you see yourself in the future. Now, okay, let's take for an example, you have $1,000 you want to invest and you have a goal that in 2 years you want that $1,000 to turn to $2,000. So that means that for whatever you invest in has to yield a return of 100% every year for you to get to that $2,000 goal at the end of those 2 years. Now, for that to occur, you need to take a lot bigger risk for you to see such high numbers of return on your investments. The question that comes up is how much of that money now needs to go into the stock market? How much of that money needs to go into the bond market, meaning debt, either government debt or corporate debt? How much money needs to be invested in gold? This is what occurs when you have a long-term goal of investing your money with how much risk you're willing to take to see that goal come to fruition. Stocks are usually looked at as a little higher risk investments because they have the highest yield of returns, and bonds are usually looked at as safer and gold as safer also. So these are ways to kind of spreading your eggs across different baskets and not necessarily just putting all your eggs in one basket. So you're probably asking, why is it important for me to care about portfolio management? It's because you want to reduce the amount of risk of you losing your investments while still at the same time giving you the best returns you could possibly have for that money you're going to be investing. Now, before you get into all of this, there's two things you have to keep in mind. When it comes to portfolio management, there's the active management and the passive management. The active management sounds just like it is. You're actively involved in the decision of your investments. For example, a person who's individually picking out stocks themselves that they want to hold long term because they understand and did the research and they want to be actively involved in the decision making of the investments. You also have passive management, and passive management necessarily means you're now investing in a broader group of investments rather than individually being actively picking out the companies you think are going to win in the future. Investing in something like the S&P 500 is an example of a passive investment because you're spreading out your risk across the top 500 best performing companies in the stock market. Okay, so now you've decided if you want to actively manage your portfolio or you want to passively manage your portfolio. What you have to understand next is you have to set a goal for yourself. And it has to be a long-term ambitious goal. So you have to set a goal for yourself in order for you to make sure you're tracking how much you need to gain in your returns for you to have that goal for yourself in the future. So if you want to retire by 45, how much money do I need to invest now in order for me to have the returns I need to have for the amount I'll be making per month in retirement to sustain my cost of living? This is what you have to keep in mind in order for when you set those goals. You also have to create a timeline when you set those goals. Not just setting the goals, but also creating a timeline for when you want to hit those goals. Next is you have to determine your risk tolerance, meaning you have to determine how much risk are you willing to take with those investments for you to have those goals come true. If you are risk adverse, meaning that If you don't like taking this big risk, then it might be best for you to just put your investments in safer investment vehicles that gives you smaller returns, but you know in the long runs it's going to still sustain the goal that you have set for yourself based off the timeline that you have. Okay, so in conclusion, know the current state of your money and investments and what the performance is currently doing right now. Determine if you want to actively or passively manage your investments. Set goals for yourself, create a roadmap for yourself, determine your risk tolerance, and also analyze the downside of the investment decisions that you're making today and how it could affect your goals in the long term. Now, if you made it this far, you already know you're a real one. If you want me to create a spreadsheet that tracks all of this for you so you don't have to do this manually, fill out the Google form down below. And if I get 30 people to fill that out, I will personally take the time out to create this spreadsheet out for y'all so y'all could track this for yourselves, because I believe it's very important, especially when looking long term. And with that being said, if you made it this far, you already know you're a real one. I really appreciate you. Please hit the subscribe button, hit the like button, share this video with a friend. I really appreciate the love and support. You guys have a killer rest of the week. Stay safe out there, and I'm out. Thank y'all so much.